Hi there, welcome to Kneppy Invest. Sometimes I do look at comments in my videos, and sometimes I will respond to those comments. And in fact, today's video or this video, it is a response to a question I did receive in one of my videos I did release last week. And this question is on Bubs. For those who don't know, Bubs produces goat milk formula, not only infant formula, but also adult formula. And the question I did receive is simply this: would love to hear your thoughts on Bubs. So why not give my thoughts on Bubs? I haven't done much research on this company recently, and I'm assuming here they're not asking about the product itself. I have no intention to drink any Bubs, either infant formula or adult formula. I have no intention to test this product myself. So I'm assuming they're talking about the company that you can trade on the ASX. And one of the reasons I was going to talk about this company on my or during my week that was video that I did release or would have released on December 15 was because of this particular announcement the company released on 11th of December. Bubs US growth accelerates. Now I do have a slight issue with the word accelerate because when you look at the below graph here, this is not acceleration. It would be acceleration if it was a logarithmic chart, but it's not a logarithmic chart. It's increasing in a straight line, going up in a straight line. So every quarter, it seems to be like a step increase. It's not a accelerating increase. If it was accelerating increase, you'd see the percentage increasing. It'd be like a exponential increase, exponential growth, but it's not happening here with Bubs. So you might say I'm being a little bit pedantic here, but I do have that slight issue with the word accelerates. Now, in itself, this is not the sort of announcement that would get me interested in making an acquisition or buying some shares in a company. But as I did receive that question, I did delve a little bit deeper into Bubs. And there are some interesting aspects of this company moving forward. And I can definitely see why someone would be interested in possibly taking a punt on this company. And the reason I say punt is because this company is not yet profitable. They're still burning through a lot of cash, but there is potential that this company could be profitable and cash flow positive in a few years. Now, Bubs did a capital raising in late November, $14 million capital raising. So this company has plenty of cash. And it is interesting, they had a lot of cash before the capital raising. I think it was like $21 million. Then they increased the cash on hand to like $35 million. And in July this year, the company also announced a detailed strategic review identifying 5 key pillars to provide a strong foundation for sustainable growth. So some of those pillars include US growth engine, portfolio optimization, sweat the asset. I actually delved a little bit into that. I think they just mean their factory where they are producing the product, they want to maximize the production out of that asset. China reset, and then also working capital and cost discipline. So Bubs is executing on its 5-point plan already, including a strategic pivot to United States. And it was really interesting to see and discover that right now USA represents half of this company's revenue. I did not know this. And also they have started a second production shift at the Deloraine production facility, and that was expected to commence or may have already commenced, and that should significantly increase the supply of products because they have had a few issues with not having enough supply because of the increase in demand. They are forecasting financial year 23 net revenue to be around $80 million. And at this point in time, sales are tracking above that forecast. And management have said they expect to be cash flow positive with positive trading EBITDA in financial year 25. It is on track and they are highly confident in their business model. Now, even though they have these expectations, it doesn't necessarily mean I will rush out and buy shares in this company because there are still some red flags in regards to Bubs. First red flags is if you go back to their September quarter Appendix 4C, and this is the section 1, the cash flows from operating activities. So nice receipts in customers, $13.7 million, but this company was operating cash flow negative by $4.4 million. And this is why the share price is under pressure right now. Why the market is a little bit skeptical about Bubs is just the burn in cash. So burning through a lot of cash And that is another reason why they did a capital raising, spending a fair bit of money on administration. Corporate price $5.3 million in one quarter seems to be I was going to say extensive, excessive. That's the word I wanted to use. $3.1 million in staff costs. I was surprised to see parent manufacturing operating costs only $5.6 million. So really, the area where they could really make some cost savings is in staff costs and administration, and maybe pump some of that money into advertising and marketing. So this is one red flag I do have in regards to Bubs, and I want to see improvement when it comes to cash flow over the next few quarters. The other red flag I have into regards to this company is simply the chart. This is a well-defined chart, a daily chart going back to September of last year, and this is a downtrend, a beautiful downtrend. And when I say beautiful, I don't mean, I mean in more regards to well-defined. This is, if you had to define a downtrend, this is the sort of chart you want to showcase. So share price since September of last year, 2022, has dropped from about 50 cents all the way down to 13 cents. At one point in time in 2019, the share price of this company was above $1.60. So the share price of Bubs has dropped from $1.60 to 13 cents. And because of that capital raising, that's why the share price dropped towards the end of November. And the share price has not been as low as this in the past. So one thing I want to see is a turnaround in the financials. They are expecting that. Management is expecting that. Just because management expects it doesn't mean it's actually going to happen. There's still few risks in regards to this company moving forward. And the other thing I want to see is a turnaround in the chart, a shift in sentiment from negative, highly negative right now, to positive. So even though I think there is potential in this company over the next few years, particularly with their pivot to United States, and if they can continue to grow in the United States, I think they are looking at getting FDA approval or something like that. If they continue to grow in the United States, I think there is potential for this company. But at a markup of $112 million right now, a downtrend in the share price, and even though they did mention they want to be or expect to be cash flow positive with positive trading EBITDA in financial year 25, that's still a little bit too far away. They've still got to hit all their goals moving forward. So at this point in time, just personally, I will have Bubs on my watch list just to see how they perform over the next few years. And I believe that's it for today's video, or this video in itself. If you do have any questions about Bubs, I'd love to hear your thoughts about this company. Are you a shareholder? If you're a shareholder, I'd love to hear why you're holding shares in this company. So leave those in the comment section of this video. Otherwise, that's it for this particular video on Bubs. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.